Welcome to the January 16th, 2023 Advanced Report from McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. I'm also president, McGowan Group Wealth Management, a team of 10 advanced financial professionals dedicated to your success. Real portfolio managers bringing you the best research from around the world on a weekly basis. So be sure to subscribe and share with your family, especially your kids that are going to have to take care of you, so you better start bringing them along. This is a great way to do it because in 5 to 7 minutes every week, we're going to cover the best of the financial news. This week, we're going to cover good news and bad news. So I'm going to start with some great news, and then I'll give you the bad news, and then we're going to tie it all together at the end, and then I'm going to give you some more great news. Here we go. This is inflation. We normally start with the Dow and the S&P. They're both up about 3.5% so far this year. That's a great annualized number, by the way, and it surprises a lot of people. Some of the reasons are going to be in here as we go through this. This is massive inflation. In the month of June, 1.3% inflation for a month. Now, you annualize that, that's 16% inflation. That's why everybody was screaming about the 1970s. The wheels are coming off the go-kart. Oh my God, this is bad, right? What's happened since June? Here it is. This last month, December, we had deflation. That's not inflation, that's the opposite. Consumer prices actually fell 0.1%. That sounds like, well, that's not very much. However, they did fall a little bit in July. Inflation disappeared and came back to normal. Take these 6 months, put them on a calculator, and then annualize it. Inflation is below 2% for the last 6 months. Federal Reserve is using the trailing 12 months. What does that tell you? Every month we go forward without massive inflation, well, you're going to see these big ones drop off, and by June, you're going to be back to normal based on this chart, unless something accelerates inflation. Wow, maybe the price of eggs will come off $8 a carton. The organic ones, I think, are like 12 bucks or something. It's really bad. Anyway, I'm acknowledging, that inflation was really bad last year. Now, what does that tell us about GDP growth? Now, the punchline is at the end, okay? Here we go. Real GDP year over year. Here's the bad news. In the third quarter and the fourth quarter of 23, you get 2 quarters of negative. Here's the good news. The negative is minus 0.1% GDP, all right? But that would be another real recession. Don't be so scared. We had one at the first half of 22. Inflation ran hotter than the dollar growth of the economy. So real GDP, after you subtract inflation, was negative for 2 quarters, and that's the textbook definition of recession. All right, so what does this tell us? That's a mild recession. Okay, so that's the current forecast. Now, there was something else about the fourth quarter. Remember this. The learned economist in Bloomberg, this is called the blue chip consensus, was 0.4% growth for this quarter. Don't forget that, because we're going to come back to it. This is annual real GDP. And it says in 2023, add all those up, you get 0.4%, about 0.5%, kind of like they thought the fourth quarter would be. And then it starts to go back up, 1.3. All right. Well, and 2022 is expected to come in at 1.9. But I'm going to show you something about that. First, we're going to do earnings, okay? Good news, the markets are up this year, 3.5% on the S&P. Oil hit $79.50 for those of you that have energy or energy infrastructure. Now, earnings, that's an earnings recession. And yes, it happened. You can see it here from the second quarter of 2022, earnings forecast to be down approximately 7 to 10%. Okay, the big banks reported on Friday, and they all had reduction in profits, but that was expected, and the Dow first went down 200-300 points, and then it recovered by about midday. What happens to earnings after that? Well, the estimates from the learned analysts are earnings start to rise, and they get better and better and better, despite the fact that you have a little mild recession there. And companies with anemic growth, like the 0.4% projected, figure out how to make more money as long as there's not a huge contraction in everything. We got a huge contraction, a recession in housing, it looks like. And so when we do that, this is U.S. existing home sales down nearly 40%. That market froze. If you're a realtor, that's a depression. And prices are coming down. By the time this is over, they may be down 20% from the peak because it's a slow-moving train wreck in the residential market, which likely doesn't pick up until the rates come back down, which may not work until 2024. So, the REIT industry, we're flashing caution. If you go to networthradio.com, we got the long play program. You can also set your time for a brainstorming session with McGowan Group Asset Management, an advanced team helping affluent families to get the logistics right and their allocations right. Anyway, that is a disaster for housing, and we'll cover more about that. There are other pockets that are actually in recession. All right, but what's the economy overall? Here's the punchline. Remember, we said the growth in the fourth quarter was projected to be 0.4, and it was projected to be 0.4 for the 2023 time period. So that's just anemic growth. It's not a disaster, but it's anemic growth. But company profits expected to start rising. Fourth quarter, we're about to get fourth quarter earnings reports. They're expected to be down. What was economic activity actually in the fourth quarter? The Atlanta Fed goes around the nation every week, pulls the data in, and provides the most accurate measure of what the current or most recent quarter is in economic growth. Their estimate, and they have been the most correct for current quarter, 4.1% for the actual GDP growth, 4.1%. And the estimates have risen to about 1%. When things are better than expected, that tends to lead to positive surprises in the markets, meaning potential appreciation if this number is true. And notice, inflation essentially has been zero the last 2 months. Could it be that we have healthy economic growth and inflation has disappeared? Well, stay tuned and come right here to YouTube each week, and we'll keep you updated as we get more data. But prepare for some positive surprises based on the real research by McGowan Group Wealth Management. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.